All right. So we're going to cover the chapters on information, accounting, and finance, and then we'll have the second quiz. And remember, it's the best three of four. And if you miss the first one, you still have the other three you can do and get your full credit for your quizzes. So I wouldn't miss any assignments and any quizzes going forward. Um, and as I just mentioned before I turned on the recording, I was going to send out announcements about the projects, but I had to deal with the cyber attack on Baruch campus. Um, so I'll be sending those out this week. All right. So the final project is not due till the end of the semester, but there will probably be some progress reports due throughout leading up to the final project. So just be alert and aware of that. The other thing is, get this ready over here. So, and all right, I just wanted to point out a couple of things on Blackboard. So I go to all right, and I'll send an announcement out about this also. So after I finish class today, um, yeah. So keep in mind that these assignments on discussion board have to be done. So, you know, you can see where 5 people did the first one on ethics. You can see it's even posted as part of chapter 2, and 3 people had done the one on Enron, also part of ethics in chapter 2. The next thing we're going to work on is information, accounting, and finance. And so after I complete today's class, I want you to start working on the this one, the Apple assignment. Actually, you know what? I'm going to put down, let me just update this. Yeah, Apple assignment, chapter 14, 15. Right. Just so you can see the chapters that it's related to. Yeah, so I'm going to need you to work on this one, wherever I just lost it. There we go. Right. So, and remember, we're jumping ahead in the chapters because you need to know accounting to work on your projects. And so it doesn't make sense to wait till the end of the semester to cover this. So that's why this is pushed up earlier in the semester. And the point of this exercise is to get in practice on figuring out how to look for information from the accounting sheet, from the balance sheet, looking at some of the ratios and figuring out how to use the ratios to understand how the company is performing. And remember, we're not going to do companies like Apple, Amazon, and a few others that are called, they used to be called Fanga, now they're called Manga. These are the new, what do you call it? Conglomerates. The traditional ones are like a company like GE, for example. The problem is that you can't go into Apple and say, I'm going to look at the performance of the iPhone and how it's the company's performing with iPhone, because it's hard to pull apart the phones, the computers, the banking, the games, the TV and movies that they're producing. So because all the numbers roll up into single numbers, like sales revenue from the company is one number, it's not separated by each one of these lines of business inside the company. So there are 4,700 colleges in America, and of all the schools in America that teach subject matter in business, they all follow the same policy. where they don't have students doing that. To do that is either a senior level or a grad course, because you've got to be able to break apart the company, read analyst reports, and then do correlations, meaning you're going to compare how companies that are focused on, say, just computers, how they're performing, and then look at the analyst reports that talk about Apple, and then figure out how well is Apple doing. And that's way above this course. That's something I would have taught in my finance, my graduate course in finance. So that's not something I'm going to ask you guys to do in this class. But after I finish today, I want you guys to begin working on this Apple assignment. And there's it. There we go. All right, so I've already opened these up in the tabs above, but I've gone into the textbook and pulled it open, and I've also gone into the slides that are here, and of course we have the alternative slides, right? And then right here for chapter 14 and 15, and then afterwards, I think next week we'll do finance. But if you go down here, you'll see there's accounting. So let me just shift this up here. So there's accounting, and then there's finance, right? And so if you click on, like all the others that we've seen, if you click on here, you see that there's additional information and videos, etc., to help you understand what these things are. Okay. So the only other thing that I would add is, and I showed you this in an announcement, I don't know if it was I don't think it was last week, it was probably the week before, something like that. But if you look down here, somewhere in here, I think it's in here, yeah. This guy who, his channel is called Clearview Tax. He's a professional CPA, and he reports on things that are going on all the time. It's a very interesting guy. He's actually pretty good. I've been watching him now for years. So, this isn't, I don't quiz you or test you on the things he says, but he talks about the things that we talk about, especially in this section of the class, right? So if you open up, even this video, and then click on the link to his other videos, he talks about things like buying stock, buying homes, how the interest rates are moving up or affecting the economy. He even evaluates what the Federal Reserve is talking about, things like that. So he's actually a very interesting person, and that might be good or useful information for you to listen to. And he posts something every day, and it usually like 12-minute long videos about whatever's happening in the economy. He will talk about it. So I encourage you to look at what he has to say. All right, so let's get into it. So if we go into, actually not the slides. So this is the slides from the textbook itself, and once again, I've got way too many things open, and it's slowing things down. Close one of these down. So, all right. So I'm going to go over the learning objectives from both sets of slides, and this one is obviously one-to-one with the textbook that you guys are reading. And again, you should be reading these chapters beforehand. So the majority or the bulk of this chapter really deals with accounting, and the bulk of the accounting part deals with the income sheet, the balance sheet, and the cash flow statement. These are really important if you're looking to go into accounting or finance, and if you're looking to go into accounting, like to become a CPA, whether you're looking to go into private accounting as a private CPA or public CPA. And we'll talk about the difference between that. But for an example, if you were to get your taxes done, and you were to have an accountant do it, that's a public CPA. So trying to think of the company with the green, what's the name of that company? Can't think of it. I know they have locations around New York, and there's some others. I can't think of what they're called, but that's a public accounting firm. And whether it's you, a small business, or even a large company, they work with public accounting firms all the time. And these firms have to, whether they're a small one or a big one, have to have someone who has a CPA, which
H&R Block.
H&R Block, thank you.
Gotcha.
So yeah, so there's several that are like these kind of retail branches. Someone becomes a CPA and decides they want to run their own firm, and they work with one of these large companies because they provide all the technology. They also provide access to information so that they stay up to date, because the rules, almost every year there's a change to the rules for CPAs, and they have to constantly get recertified in those particular areas. Otherwise, they can't practice as a CPA. You can't practice without being a licensed CPA. Now, you may finish accounting courses and go work for a public accounting firm, one of the big four, like Deloitte Touche, Ernst Young, KPMG, and I can't remember the fourth one. And you don't necessarily have to be a licensed CPA, but someone inside these firms, whether they're small or large, is licensed. So you prepare all the work, and then the licensed CPA goes over it to make sure everything is done properly. And then they give final advice to the client. And then, of course, the client, like you and me, before April 15th, we have to turn our information into the IRS. Then they give it back to us, and then we mail it in. So, so anyway, and then the private accounting works within the company. So, for instance, if you go to General Motors, there will be people who are accounting majors and potentially even CPAs who work for General Motors. And so they serve a function. If you think about it, you've got to set up budgets, and you also have to prepare to work with your partners. On the budget side, let's say that you are a marketing manager at General Motors and you want to build a prototype of a new car. Well, when you go to get that money, you go to finance, and finance then looks at the accounting department and say, do we have the money in the budget for this? Because finance basically is assigned for coming up with the money to pay for things. That's their job, especially corporate finance. And we'll talk about that next week. But they work with the accounting firm, other accountants inside the company, and say, we need you to set up budgets because we're going to give this department a budget to, for instance, when they're working on their electric battery, and they want to come up with a better electric battery, there will be someone who's the product manager for electric battery. And I know all this because I was a product manager multiple times, and I would go to the head of the company and say, I'm going to build a new product here, and I need $5 million. And I would go to the accounting people to find out, where the numbers are in the budget, and I would go to the finance people and say, please, may I have the money? And when the finance people said yes, then we would set out a way for me to get the money out of the budget, which was set up by the accountants on the inside of the company. The partner side would be if, for instance, if you work for a large company that sells through a reseller channel, especially if they're independent. So, for instance, I think you can buy Apple products at B&H Photo. I think you can buy computers there because I'm almost certain you can buy computers there. Well, B&H Photo is a separate company, obviously here in New York City, and Apple's a separate company headquartered out in California. Well, they want to do a business with B&H Photo, and so they want B&H Photo to sell lots and lots of their products. And so what B&H Photo then will do is talk to people like you and me and others who online, direct, advertising, things like that to sell. And the more they sell, the more Apple encourages them. And part of the encouragement is to provide what's called reseller development funds. And there's a budget set aside to actually do that. The other thing is B&H Photo may want to know, well, is Apple a sound company? Meaning, do they have their finances in order? In other words, we don't want to get into business with Apple, and then 6 months later they get into financial trouble. Now we have all this inventory that we have to sell, or we're expecting inventory because we just made sales to customers and we can't fulfill those orders. So B&H Photo wants to see their accounting sheets to make sure that they're able to do that. The other, and then the same thing with the suppliers. And Apple will do the same thing. Is B&H Photo a financially sound company? Do they have their numbers in order? Are they going to be around for the rest of the year while we sell our products to them? And then the supplier side, people who are providing products so that Apple can build their products. It's the same thing. Are those companies in good or solid shape? And those companies is Apple in good solid shape? So they want to see it. And then the other side of the financials, of course, are the investors. If you wanted to buy a house, the bank's going to ask for information about how much money do you make, how much money do you have saved, do you have additional assets like other properties or securities like stocks and bonds, CDs and money markets, right? And they most likely, and this even happens if you rent apartments now, in some cases, they say, can you provide us with your W-2 and your accounting form from last year? We want to know, are you financially solvent? Are you able to pay the mortgage on this house? Or if you're buying a car, the car. So, and so this becomes more of a finance thing. So whether you're borrowing money for a home or you're looking to get money from investors for your company, right? So you can see accounting is really important from the inside of the company and also from the outside. Now, one of the assignments for the last 3 chapters, I think it was chapter 2, was on Enron. This is part of the reason why I wanted you to do this beforehand under ethics, because one of the issues they ran into is a problem dealing with accounting, because they were cheating and lying on their accounting forms. And also the oldest accounting company in America was in collusion. In other words, they were in on what they were doing, and what they were doing was wrong. They were doing things that were ethically wrong. They were manipulating how much money they were making. And they got into trouble. And there were several things that changed, which we'll talk about in this chapter. And also when we get into the accounting part of this. They wound up getting in trouble and they went bankrupt and they had to close. So the oldest accounting firm in America closed because of the unethical practices that they were doing along with Enron. So, if you haven't done it, you should do the Enron assignment that's in discussion board, which was assigned to you in chapter 2. Because some of the best ways to learn is through failure. And so you get to learn because of their failure. All right. So I'm going to go over these learning objectives, and there's going to be in the alternative slides 2 slides, because in the alternative textbook they broke this stuff out into 2 areas, into 2 chapters. So the first one is, what are financial reports and accounting? Why are financial reports and accounting information important, and who uses them? So I've kind of started to get into that. It is, if you are a publicly traded company, if you are a citizen of the United States, you have to have your numbers put in order and filed with the IRS. So I don't care if you're General Motors, Apple Computers, or Joe Smith, or whoever. We're all required to file our taxes with the Internal Revenue Service. Everyone, right? And if you're a company, you have to use a standard practice in order to do this, and that comes under accounting. And if you look at the additional information I provided under chapter 14, you will see that accounting dates back into the 1800s or so. This is not something that this came about more recently. This is something that's been around for a very long time. What are the differences between public and private accountants, and how has federal legislation affected their work? So again, looking at the video under Enron in chapter 2 informs you of this. Reading the chapter, of course, informs you. And as I mentioned, when Enron got in trouble and Arthur Andersen got in trouble, there were several things that were changed in the practice of accounting. And I'm going to go over that, but you should, if you haven't done that, an Enron assignment, you should do it because you'll learn in 13 minutes the mistakes that were made and the changes that were required. The 6 steps of the accounting cycle, we'll go through that. In what terms does the balance sheet describe the financial? So these are the major statements. These are the things that you're going to be looking at when you do your final projects. So there's the balance sheet, the income statement, and the cash flow statement. And we're going to go over that. And then there's the ratio analysis. The ratio analysis is important because it's actually fairly simple and straightforward. As a matter of fact, if you want to become an accountant, you only have to know how to do addition, subtraction, division, and multiplication. That's the extent of the difficulty of math in accounting. It's actually much more important that you can be trusted and that you know what the laws and rules are, because those change almost every year for different aspects of accounting, what you can and can't do. And the ratios are fairly straightforward because they help you to establish benchmarks. How do I know if a company is doing better than it did last year? How do I know if the company is doing well within the industry? In other words, I want to compare General Motors to Ford, to Toyota, to other companies. The ratios help me to do this. And so we'll look at that. And what are the major trends affecting accounting industry today? A lot of it has to do with people doing bad things. I wouldn't be surprised if new laws are created as a result of what Donald Trump is being charged with, because he was manipulating the value of his assets. He was stating that they were worth a lot more to get people to invest, and then he was saying that they were worth a lot less, so that when the auditors came to his properties, like at Mar-a-Lago or some of these large buildings that just over this weekend, they've been pulling the name down off of places like Trump Plaza and Trump Tower. They're literally pulling it down because there was a decision made by the judge last week, because he was manipulating audits on the property, saying, oh no, they're not worth that much, and so I shouldn't have to pay as much tax on it because there's such a thing as real estate tax. So he was using the very same properties to say, I'm worth this much, so invest in me. And then using those same properties saying it's worth less than this much, so don't charge me as much on taxes. That's collusion, that's manipulation, and it's against the law, right? It's against the law, right? He has to pay his fair share of taxes, and he shouldn't be given privileges to gain more money than you and I. So in this case, this is where the U.S. Attorney General and the State Attorney General, especially here in New York, Letitia, I can't think of her last name. She lives in Brooklyn, but she's the she's the New York State Attorney General. Their job is to protect us. They are not aligned with the Democrats. They're not aligned with the Republicans. They're aligned with the citizens of the United States, and their job is to protect us from bad actors. And he got busted. All right, so a lot of there will probably be changes. And a lot of it has to do with technology and automation, the ability to do more and more to do online, like the ability to file taxes and such. So let me show the other slides, and then I want to jump into the first one.
Letitia James.
All right, so this one is this is from the alternative slides, and this is what I mean by it's broken into broken out in 2 different ways. And you'll notice that the chapter number is different. You'll see when I show you there's a 14 and there's a 15. Actually, let me start with the other one first, so that it's more like apples to apples. They seem more they're the same. There we go. So the alternative slides are fairly simple. No, that was, oh, sorry. I had it right the first time. I had it right the first time. Yeah, so in the alternative book, it's 14 and 15. And so they've broken it out into 2 parts. So the part that looks the same is on 15, and then I'll go to 14 and I'll show you what's there. We'll do that one, and then we'll jump into the chapters 15 in this one and 14 in the other. But you can see there's a lot of similarity. Um, why is it important to report information accurately? And notice that in addition to um, there being a managerial accounting for instance, managing the company for budgets, like as a product manager, as I mentioned earlier, and then there's the financial accounting that's also talked about here, just using slightly different language in these statements. Identify the people who use accounting information. As I already mentioned, you've got people within the company who are basically trying to manage their departments, and then you've got people outside the company, your partners, like Apple working with their distributor like Best Buy, and Apple working with their suppliers like Foxconn, who builds a lot of their products over in China, or companies that are providing microprocessors, or now that Apple is building their own processors, they're even the raw materials to put into that, right? So that's, and then also working with the investors, the bankers, and the IRS, the financial. So I have managerial within the company managing budgets, and I have financials working with my partners, bankers, investors, and the IRS on the outside. And oh, by the way, a lot of what we talk about is U.S. based, but you will see that there's a small area that does mention international. But for the purpose of this class, we don't spend a lot of time in the international side of accounting. It would just take too long to get through it. And it's a little bit more complicated because the accounting rules in the United States are not the same as other countries. And you may say, well, why not? Because if I were to look at, again, General Motors, General Motors, you can buy a General Motors car in England, you could buy a General Motors car in Australia. And so it's a multinational company. So yeah, these companies do exist in these other countries. But remember, we learned in chapter 1, GDP is based on the country itself. And so you have to then be able to report all the earnings within that country. England is a sovereign nation. Australia is a sovereign nation. Germany is a sovereign nation. Japan is a sovereign nation. You can't go into a foreign country and tell them how to report their earnings that roll up into their GDP, their gross domestic product. China is a sovereign nation. You can't tell that country how to report their numbers. So there are some consistencies, like what were your total sales for the year? What were your total profits? And then there's some inconsistencies, like when do you report and what numbers do you have to report? And so that makes it more complicated if you become an accountant and you work on the international side, meaning not just do you work in another country for that company where you have to get different licenses and there are different requirements to be able to practice that in another country, but then how do you do it together? In other words, General Motors is headquartered in Detroit and they get part of their sales revenue from other countries. Well, how do you roll those numbers up, right? And how do you report that within the US? So for instance, if you work for, if you invest in some of these companies, like General Electric or even Apple, so General Electric, for instance, is another one of these companies that's a conglomerate. They make washing machines, they have a TV station, they used to have a bank, but they also make jet engines. And they make jet engines in Brazil, but they don't bring the money from Brazil back into the US, because if they did, and you sometimes hear about this in the news, where companies are getting, they're not bringing their money back in and paying US taxes. And so, there's concerns about that. Well, General Electric is saying, well, if I bring them back in, I have to pay 33% or whatever tax on my earned income. But if I leave my the money I earn in Brazil or some of these other countries, the tax number is much, much lower. So for instance, you will find many multinational companies are headquartered in Switzerland, or for instance, in Liechtenstein, where they have zero, the income tax for corporations is 0%. Is 0%. So why would you bring it into the U.S. and then give up 20 to 30% of your revenue in taxes? Well, that's an interesting argument. It becomes very philosophical because as a citizen, you're like, well, if you give us that money, then maybe we can allow more students to go to college for free, because in a public university like BMCC that uses public funding, and that money comes in some parts from taxes, that helps. Or maybe it funds the military, or maybe it funds museums and roads and things like that. And that's a fair argument. That's, we learned that some of these public funds go to fund certain things that are needed in the infrastructure in the United States, where if you go into other countries, they have very poor infrastructure. And it's it's in part due to the fact that they don't have as much money coming in through their taxes. On the other side of it, let's say you buy stock in General Electric. You're like, well, no, I don't want you to pay all this money in the taxes, because the more money you earn, the more money you keep, the higher the price of my stock goes. So if I bought stock last year and my stock was $100 and this year is $150, part of the reason it went up to $150 is because I kept that money. So you can see it's a very interesting argument philosophically, because you can argue for both sides. And some people are going to lean more heavily on one side. If you're a wealthy individual and you don't worry about public funding like medical, the military, schools, roads, all these kind of things, then you're like, no, I don't want you to pay any taxes. I want you to keep this money so the value of my stocks go up, and I become richer and richer and richer and richer. And everyone has the right to say that and want that, right? You want to pay as little tax as possible, but still maintain. Remember, we talked about quality of life and standards of living in the United States. You want to maintain a high level of that stuff, right? And if you don't have a lot, then you're like, no, I need more of that money in large corporations to pay their fair share as much as possible in taxes, so that I have equal opportunity. Right? I always believe people start as Democrats who have very little, then they become Republicans because they want to keep as much as they have, and then they become liberals because they want to give back and like put a library into something, right? And then somewhere in between, we kind of cross both sides. We want all the freedoms of society, but we don't want you reaching in our pocket and taking money out for taxes. So it's an interesting thing. So it becomes a very philosophical argument. But the technical aspect of it can be very, very challenging, and it's way above this class. So we don't get into that aspect, but there will be one thing we talk about at some point in regards to that. All right. So again, the process, which is the 6 cycles, the balance sheet, the income statement, the cash flow statement, and then evaluating the financial health, which is another fancy way of saying we have to look at the ratios. Like, what's the profitability? What's the debt to asset and asset to debt? What is the profit for every dollar you invest in the company? How much do they earn? So you may have here EPS, or earnings per share. How much did the company earn for every share of stock? And the share of stock, of course, is how much money is invested, like you and I buying shares of stock, right? So it's very, very similar to the other one. So let me then look at and stop me if you have questions as we go along, because it's and this is where we'll start. We'll get into this part, and then we'll jump over to the meaty part of accounting. And so the other book kind of blends this into the accounting, and the alternative splits it out into 2 chapters, right? So it's understanding information. Primarily, we're leaning on the information side, not the e-business part. So I'll spend more time on the information aspect of this and not nearly as much on the business side. So examine how information can reduce risk when making a decision. So I mentioned earlier that if you want to become an accountant, these are chapters you want to focus on, but you may also want to become a finance person. So again, accounting essentially setting is a set of rules. It's kind of like writing a resume. Things go where they're supposed to go, and then companies that you're hoping will hire you will look for that information where it is. So there's the top, things like your name, your email, stuff like that. Then usually there's information about what you're hoping to accomplish. Then there's your work experience, then there's your education, and then there may be some additional stuff, and then there's references, etc. Well, in accounting, it's similar. Things have to go in a particular order. You're going to find that the sexy part of business, especially when it comes to numbers, is not how you're arranging it or getting fancy with that kind of stuff. Matter of fact, you'll actually hurt yourself if you do that, because people will think that you're hiding something. The sexy part of business is the creative side of marketing and your ability to make money, and more importantly, profit, right? They're like, oh, wow, they control their costs here. They created value, so people bought more of their product. And as a result, controlling costs, increased profit, and creating value meant that people saw value, and they saw greater utility. So if you remember when you, actually you haven't done it yet, but there's a video you're going to see on the case method of excuse me, no, you did see it, the issue on ethics regarding the trolley car example, and there was one other example in there about the ship that you're supposed to do, and they talk about things like utility, and utility is a measure of satisfaction. And even in high school, some people learn about Maslow's hierarchy of needs and utilities of satisfaction. And all it means is that the higher the utility, the more satisfied you are. And they use the term utility, which is interesting because we think of utilities as like Con Ed. And we think of Con Ed, we think of, do we have electricity? If it's cold out, can we turn the heat up? If it's hot out, can we turn the air conditioner up? And so we leverage our utility, our gas and electric, and then we turn it up or turn it down. And the more heat we have in the winter, the more satisfied and happy we are. The more air conditioning we have in the summer, the more satisfied we are. Well, if you look at that same, if you recontextualize the meaning of those words, if I buy this product, how satisfied am I? And the more satisfied I am, the more I'm willing to pay. So when you look at products, you look at, again, utilities of satisfaction, and these are actually terms, economic terms. But the higher the level of utility, generally, depending on who you're selling the product to, the higher the satisfaction. And the higher the satisfaction, the more I'm willing to pay, right? So when businesses are evaluated, people look at it, they're like, wow, look at how much utility they created, how much more value, which means how much more money, which means how much more profit. So I can create profit by pushing value up and by pushing utility up. Maybe I added a feature. It can do things it never used to do. Like if I look at smartphones, the phone started as just the ability to dial and maybe some SMS text. Then they added pictures, videos, music, movies. And so they kept adding all these features, and these features made people more and more happy because they could do more things with it. Well, as they did that, they pushed the utility of satisfaction with the product up. And as a result, the value of the product went up. And as a result, the price of smartphones went from maybe 400 to 500 to 600. Now it's over 1,000 just to buy one phone, right? So there's a direct correlation between utility of satisfaction, value, and price. And as that goes up, assuming that I control my costs, I increase my profit. And then the other side is the more efficient I get, the lower my costs go. So I increase productivity using maybe robotics. I can produce many more cars instead of using a human being to build a car. I can do it more efficiently, more quickly, and I can build more cars by using robots. And so I make the initial investment in the equipment, the computers, the robots, and all of a sudden the cost goes down. And so like Amazon is using robots in their warehouses and getting rid of the need for people. And so they're becoming more efficient, more productive. And as they do that, they become they lower their costs because the robots do things more quickly, more efficiently. They don't have to take breaks. And so the productivity goes up because I can get more product outside of the factory at a higher level. And so the profit piece is the part that's really important in the middle. So that's when we look at the ratios and we look at the health of a company. And when we look at what's sexy, that's the sexy part. But in accounting, the balance sheet is the balance sheet, and it's set up the same way in every company. The income statement is the income statement, and it's set up the same way in every company. And the cash flow is the cash flow. They're set up the same way in every company. And whether I'm a bank, investor, the IRS, a partner company like Best Buy or raw material, or somebody who's supplying sub-assemblies, things like that, there's no difference. They look at it and they expect to see things in the same place every time, just like they would look at your resume. They expect to see things in the same place, right? All right, and so I mentioned accounting on finance. The first thing that most people think of when they think of a finance person, because think about this, right? So somebody in your family or a friend comes to you and say, "Hey, can I borrow $1,000?" And your initial reaction is to be hesitant. And part of the reason you're hesitant isn't because you don't want to give the money, right? Let's say it's somebody you care about and that you want to help them every chance you can. The problem is, when would you get the money back? And like there's this old saying that you don't lend money to family, because when you mix money and family together, it creates problems. So like my sister works in finance and banking, and she says, never give money to family, never lend money to family, just give it to them. Because whether you do get it back or not, it's going to create a problem. And more likely than not, you're never going to get that money back. And so what we're talking about is risk. And there's things called alpha and beta risk, which we won't get into in this class. But as a finance person, you evaluate risk. Well, in order to figure out whether the risk is high or low, you need information. And so that's why this part of this section is important to us, because it's going to help us understand decision-making that uses accounting, that uses finance. And then the systems that allow you to do this are management information systems. And then we're going to look at what are the kinds of bits of information that a business needs, right? The functions of information systems, right? I don't want to go into it here because they tend to be a little bit more detailed, but there's certain parts of information, and some are more important than others, and that depends on the business we're talking about. How computers are used to improve productivity, and I kind of gave an example, like with robots that are used in building cars at GM, and robots that are used at Amazon, which moves products back and forth. In other words, where people used to go out to the shelves and pull items, now the shelves move to the people where they're picked, because they have these round robots that go up underneath the shelves, and the shelves move all over the floor of the factory, and it comes to the person who's picking the item, right? It's just these factories, if you drive across the state of New Jersey, off the George Washington Bridge, you will pass at least one of them. And if you think about the football stadium where the Jets and Giants play, imagine three of them, one after the other. That's how big these places are. They're huge. They're huge. Computers help with decision making. Like, what's the best decision for XYZ? I need the data that turns into information that then helps me make better decisions for communication, sales, recruiting, and training. So systems, this is where we're getting a little beyond what I want to cover in the class. So I'll briefly mention these things, but this is not where we see the majority of what we're learning for the class. And then how computers and technology change the way information is acquired, organized, and used. All right. So again, we're looking at this as part of accounting and finance, but majority of what we're going to learn in the next 2 weeks are accounting and finance. Okay. And then again, briefly talk about e-business, which is not that big a deal anymore, because I think most people know that if you buy something from Amazon, that's e-business. It's one of the first companies that really took off in that space. You can set up your own sales site right now personally, and eBay is another one, although some is direct purchase, some are auction. The fundamentals of e-business and the factors that affect e-business. Oh man. All right. So how does information reduce risk? And this chart actually makes it easier. So the more you know, the more you're informed. So for instance, if you were to borrow, but if I asked to borrow $1,000 from you, you'd want to know, well, have you borrowed before? How long did it take you to pay back, and how much did you borrow? How much money do you make, and how much money do you spend? That will give me an idea if you're overextended. Like, you know, if you make $50,000 a year and you're after taxes, you have, after you pay your taxes, the biggest amount of money you normally spend is your housing costs, whether it's rent or mortgage. And then you have a bunch of other, your transportation, your food, your medical, things like that. So let's assume that after taxes of 50 grand, you're left with maybe 35 grand. And, you know, you can easily do the math, but if you're spending $33,000 in all of your expenses and you're left with two, you probably are not going to get the loan, right? Because, you know, $2,000 in case you want to go on a vacation or it's an emergency, or you have a wild weekend in Vegas or whatever, it's going to disappear fairly quickly. So you're probably not going to get the loan. But maybe you also have a side gig where you're an influencer, and you have a second line, a stream of cash coming in. It's like, oh, that's additional information. Or maybe you do some contract work, and there's a big contract coming this year that you're going to make an additional 20 grand. Or when you finish your degree, I've had students say that once I finish the degree, the company then puts me into a supervisory level or a entry-level management position, and my income increases by 30%. This is additional information which helps. Or it could be that you manage very tight budget, but you always pay your bills on time. And so part of the way they figure that out is they look at a history of your spending, and you can easily find that on the credit services. Everybody should actually do this. Look at your FICO score. Is supported by Experian, by TransUnion, and there's a third one. Can't think of the third one.
Equifax.
Equifax, thank you.
Yeah.
Yeah, I think one in San Francisco, the other two I think are in Atlanta. But you can now have access to it online, and it's good to look at it because sometimes there's mistakes. I found mistakes on these reports before, and they affect your FICO score, and your FICO score will affect getting into schools, getting jobs, getting homes, things like that. It's a big deal. So they look at it and says, wow, so you've actually been making this much money and you only have this much money left, but yet your FICO score is really high. So, you know, your FICO can go up into the 800s. Matter of fact, there are some strategies by businesses that will look at areas where people have majority 500 score FICO scores, which is not good, right? Below 600 becomes a poor score. And then they'll look at people with the 600s and the 700s, and they'll literally market to those areas based on that. And you will find that there are locations where FICO scores, you can even see the average of FICO scores. So knowing your FICO score is really important because it may influence, for instance, if you're borrowing money. But that holds true for small businesses and also large companies as well. And that's just one bit of information, right? But it gives an indication about if, for instance, if a company is going to get paid back, and again, like the others, or will they sustain throughout the year as a business partner, etc. Even within the company, I mean, do you always work within budget, or do you go over budget and we have to constantly bail that department out? In other words, maybe you're not managing yourself really well, right? So information is really key, and the more information you have, the point is, the lower the risk. And the less information you have, the greater the risk, right? And so hopefully that's fairly straightforward, right? You don't want to loan $1,000 to somebody and you don't ask them any questions. Or, I mean, I'm sure within families people do that, because they love individuals and stuff like that. But at some point, there's a number that says, you know what, I love you, but now you're asking for a lot of money, and we need to get more information, and maybe we need to control this. Like, you got to pay us back this much every month or whatever, stuff like that. So that's the point of this. That information, there's a direct correlation between the amount of information you get, and then we want to get into the quality of information. In other words, is it relevant? It's against the law, say for instance, to go to a woman and say, "Are you planning on getting pregnant this year?" Like you're interviewing for a job. You cannot ask a woman that question. It's illegal. Now, do companies try to get away with it? Do some of them do it? Do they pressure women to do it? Yeah. And more times than not, they eventually get in trouble. They get in a hell of a lot of trouble. Wells Fargo Bank got into trouble, fired the CEO, and it cost them billions of dollars because they were taking women who were single parents, putting them into the branch banks and having them open up credit cards for people unbeknownst to the person. So you have an account at Wells Fargo Bank, and all of a sudden you see your FICO score go down because it says you opened up a credit card, whether you got the card or not. And so the bank then is getting fees off that card. And they look forward to you using the card because then they get interest payments off it. But you never signed up for the card and you never signed for it. And they were pressuring these women to do it. And these women were like, if you don't do it, we're going to fire you. And it's just you and that child. And this is all the money you're making. And so these women were under a ton of pressure. So, the bank got in a ton of trouble. I mean, just serious trouble. So where was I going with this? Oh, it's illegal. You can't ask certain questions. Why was I mentioning the questions? I think it had to do with information, right? There's certain things that the quality of information. There's things that you can ask and things that you cannot, right? Some of them are legal, and then some of them just have nothing to do with what you're talking about. Like, what if you borrowed money from a bank to buy a car, and they said, show us the breakdown of your expenses, and maybe you do take vacations, but then telling them that you take a vacation to Ibiza so that you can party they have these pool parties where they fill it up with soap bubbles and everybody gets in their swimsuits and they jump in these massive swimming pools and they have a soap party. That's none of the bank's business, right? The fact that you took a vacation, it cost you this much, that's a legitimate question to ask because you're going to have to pay for that vacation, right? But the fact that you went over there and had a soap party in Ibiza in Spain, it's none of their business. Or that you like to drink wine in Napa Valley, it's none of their business, right? So in some cases, the questions, the quality of the questions are illegal. Some of them are irrelevant. Some of them have nothing to do with the business itself. And if you're loaning them money, sometimes you have to dig a little harder to make sure you get the information that's relevant or important, right? Right, situational. And that's what I'm getting at. It depends. It really comes down to that. Like, what business are you in? What are you trying to accomplish? And then this is something, this is kind of like, these are more like definitions that people get mixed up. By the way, data is a singular and a plural word. What do I mean by that? If I say that's a piece of data, or that's a number of pieces of data, in both cases, I didn't have to add an S for plural. So data is singular and plural, by the way. Like, you don't say, how many datas do you have? You say, how much data do you have, right? So numerical or verbal. And what's the point? Let's say there's 30 students in the class. And let's say the question is, are more women going to business fundamental classes year over year over the past 10 years? In other words, maybe there was 2 and now there's 60% of the class is female. So if I asked a question for data and they said there's 30 people in the class, I know there's 30 people in the class, but it didn't solve the problem. I don't know the answer. Let's say the school gets grant money or public money, the more women or the more diversified the class is. I did not solve the problem. I gave you data, but what I did not give you is information. information is connected to the problem. Data is data, and it can be numerical or it could be a verbal description, right? You know, 5 of the rooms are blue. That's a verbal description. Did I answer a problem? I have no idea, but I gave you data. Information connects it. So now if I say 10 years ago, 30% of the class were female and people of diversity. And today, 60% of the class is female and people of diversity. And if I looked at the data for each year, I could compare year to year to year, or in financial terms, we call it year over year, year over year, year over year. Now what I can do is when I compare year one, so Y1 minus Y0 over X1 minus X0 is a ratio. And all I've done is Y1 is 1 year, and then compared to the previous year over, and usually the X is time. So 23, so 2013 to 2012, that's 1 year. So essentially it's how many in 2013 minus how many in year 2012. And now what I've done is I've created a ratio, and then I can plot that along, and then I can see what's called a slope line. And I could say that the amount of women and people of color increasing are this percent. And then when you go compared to other schools, and they say, oh, we're doing it faster than the other schools, then they go to the company or the business that's providing grant money, or the city of New York or the state of New York or the federal government, and say, we've increased the number of women and people of diversity by this percent per year. And when you compare it to other schools similar to us, right? Like, don't compare us to Harvard. We're not a private college, and we're not a 4-year college. So compare it to us, like around the United States with similar population mixes. And it's like, because BMC is actually one of the schools that actually does a really good job, which is why Jeff Bezos' former wife gave the school $40 million, because she believes that the school is doing a great job of bringing people of diversity and women into the school. So when they look at it, they say, oh yeah, you're increasing by this percent. I've solved the problem. I've applied data to a problem, and that data now becomes information, because what I've done is I've provided you something that is relevant and addresses the problem itself. Does everybody understand what I'm saying?
Mhm.
Right? Data is data. It doesn't do you squat until you can apply it. If you like sports, what's the strikeout per inning? Because someone said, is this pitcher any good, and do they strike out the batters? There's the problem. Now I've applied data. They looked at how many innings do they pitch, how many strikeouts do they have, compared to each one of the games, compared to year over year. And the agent probably says, my pitcher strikes out more than other pitchers who have the same ability, same age, etc. Therefore, this pitcher should be given more money per year, right? And that's sports agents do it all the time. They compare performance of their athlete from the year before to now, and compared to other athletes who are similar to their athlete. And businesses do it the same way. How do you, for instance, if you're a young man under 25 years old and you drive a sports car that's red, sorry to tell you, your insurance is going to be higher than a woman's insurance. If you take a woman who's 24 years old and you're 24 years old, and she drives a red sports car and you drive a red sports car, you will pay a higher rate of insurance. You may be like, well, that's not fair. How could they do that?
Go by
Because
the numbers.
they looked at the data, and the data shows that men typically are more aggressive, and men who are aggressive like the color red, and people with red cars tend to drive them really fast.
Yeah. Insurance companies have data on literally everything.
They do. I mean, if you go into some states, they're not giving out tornado, earthquake, and flood insurance in some places, because they realize even the best people cannot prevent floods. And so there's more effort going into building towns that are earthquake proof and tornado proof and hurricane proof, because these people's homes cannot be insured. It's not even that they can't afford it, they just can't get insurance.
Yep.
Right? Because the data shows that this many, because of global warming, this many environmental things are going to happen, and there you go. And if you think this has nothing to do with business, sorry to say,
Everything.
global warming has a direct correlation to the success of business and society, because if you can't afford to buy the insurance and your home blows off the face of the map, where do you live now? Right? And
Exactly.
you've invested in it. And what are you going to sell? The picture of the home that used to be, nobody's going to buy it. So your biggest investment is going to be your home. And
Yeah.
if you can't protect it with insurance, and that's because of the global, and a lot of that has to do with what we've done as people by driving cars with fossil fuel and the choices we've made in society that are affecting the atmosphere, that then creates weather patterns that then create problems. And those problems, like, look at what happened this past week in New York. We literally had flooding in the streets. And it's really hard to flood New York City because if you walk down Manhattan, right, like past the school, the street is 30 feet above the bedrock. And that's because you have subways and you have water pipes and all this stuff. That means that the rain came down so fast and the parts of Manhattan, and it's actually been shown where Manhattan is sinking in some areas because all of our buildings are so big and heavy that that the
Yeah.
streets flooded last week. And so the city's literally looking at, we've got a problem on our hands here. Battery Park City could easily go underwater, right? And then forget about Florida. I mean,
Florida's underwater right now.
yes, I mean, look, you ever been to New Orleans?
I have been in New Orleans, yeah.
When you drive down the freeway in New Orleans, and they have what's called a conduit on the right side, and you
Hmm.
can see the other side of the road. It literally has the Mississippi River
Like right
above
on
your
top of
head,
you. Yeah.
flowing down to Lake Pontchartrain and the Gulf of Mexico.
It's crazy.
I mean, you got to process it. There's a reason why you can't get a basement in Fort Lauderdale.
Hmm.
So next time you go to New Orleans, and they have these conduits, these races, these tracks, these areas where normally you would look across and see the road on the other side going the other direction. It's because the river is literally flowing next to your head and you can't see
Yeah.
it.
It's crazy. That's
So
funny. I've been craving a po' boy for like a week.
you've been doing what?
I've been craving a po' boy for like a week. I haven't had one in years.
Oh, a po' boy, yeah, sandwich for a
They're
week.
good. Yeah, for a week for no reason. I'm like, I want a po' boy, and there's nothing
Well,
around here.
I didn't see that one coming. That was pretty good. All right. And then the database is obviously where you put it all together in a single place. Think of a database like a file cabinet, right? You organize it in a way, and then when you need it, you go in and you pull it out. And then within the file cabinet is the database, and within the database, you have files. So, you have your file in this class, this class, this class. Maybe you're getting married, maybe you're going on vacation. You have different files. It's all organized. So a collection of data and information stored in one place that can be used by people throughout an organization. And what this suggests to you is a shared where. And it started out with things like Lotus 123, and that became Excel. And then of course Google got into it, and now Google has it so that, and the difference of course is they made it so that it's free for everybody. But if you open up a document, I can open up a document and work with a team of students within a class, and each student can contribute and not necessarily be sitting in the same place at the same time because they have shared access to that document, whether it's a document, a spreadsheet, a PowerPoint type presentation or whatever. So what they're saying is I can also create a database within a company, and I can give complete or select access to that database, right? If I'm the finance manager, I'm the HR manager, and I have everyone's personal information. This is why HR people have to, like an executive secretary, you think, oh, she's a glorified, or he's a glorified administrator, or whatever. No, it's an issue where very high level secure information is being passed back and forth, and everyone should not have access. This is why when you have people who work in a counseling function, I forget the terms they use, but you have to be able to manage discretion. Like you can't go share information that somebody is suicidal or they have HIV. You can't share their personal finance information, things like that. So in some cases, these databases have select access. It's called class of service. If you don't have the proper class of service that's created through technology, through the actual system itself, in other words, they click. It's literally clicking a button that says you can see this, you can't see that. And some are simple as you have access to this printer, you don't have access to this printer. In some cases, you have access to this database, you don't have access to this database, right?
Uh-huh.
So now the next one is knowledge management. And so people sometimes get confused over this. So a firm's procedure for generating, using, and sharing. So sometimes knowledge is the culmination of all of this together that allows you to be a better decision maker, right? And so in this case, they're also using procedure, right? So whether you're in the military, whether you work in a hospital, whether you work in a retail store, in order to create profit, you have to either increase value and or reduce costs. And part of reducing costs can be done through process. So like when you go to McDonald's, if everybody just, if the person selling it to you say, wait here, I'll go cook it myself. And the person in the back says, wait here, wipe the sweat off their brow, dust off their hand, and then, so in small businesses, they'll do that. And you can see people getting upset. They're waiting. I've been here a long time. Where's my burger? Oh, my burger's not cooked right. I asked for cheese. It gets completely out of hand and very inefficient. Productivity goes into the floor, and the value drops because people don't get what they want, and they don't get what they want when they want. Hence the term fast food. It becomes less fast. So McDonald's works with the process. Banks work with a process. Hospitals work with a process. The military works with a process, right? And all of these ideas of procedure and process actually come from the military and then wind up showing up in businesses all the way down to small businesses. So, this is our process, this is how we do it, right? So what they're seeing as part of knowledge management is the firm's procedures, right? Procedure process for generating, using, and sharing data. So here's how individuals are allowed to have access to the information and the requirements they have to meet to have that. Like I can't have someone in the manufacturing floor who's building the car so we have access to HR data for everybody in the company. They don't have the credentials. They're not in the right position to be able to do it. And they could potentially cause harm to the company and create not just poor productivity and inefficiencies, but legal action against the company, right? So they're including not only the culmination of all these things that come together, your experience, your skills, your education, your ability to put data together to create information, but also be able to manage the process to provide, to have access and then create and then even distribute that information, right? That's what they're getting at. And so you have things that are called knowledge-aware systems, and that becomes more and more big now because of technology. And a lot of you probably familiar with it. It's called AI. There's big data and there's AI, right? And so more and more with AI, you have systems that are now making decisions that don't require you and I to be involved. We set it up. We know what we're expecting. We set thresholds. You go over this, we shut the system. Like when the spyware attacked Baruch last week, they probably had a trigger. It's kind of like if you were cooking and you fall asleep, and I admit that I did this in college, unfortunately, because I was an idiot, but the water boiled out and then the pot started to throw black smoke into the air, and the fire alarm went off, and the fire alarm then triggered the whole building, and the building then triggered the fire department. These are triggers. Now, that's fairly extreme, but I could have triggers on, and we see this in Wall Street, and this happened as a result of runs on Wall Street during the Great Depression, during the blackout of '77, during the blackout of the 2000s, and also in the financial recession of 2007, 2008, where, and this happened when some of you may have invested in GameStop. And so there was this run on investing in the stock, and it was running up, and it was being artificially inflated by young people who didn't want to see the company go away. And then all of a sudden trades were halted. So they literally have a trigger that stops it. They literally have a trigger that stops it. So AI will manage to a point, and then there'll be a trigger in systems that will actually stop it. They say, okay, this is too extreme. Someone needs to go in and figure out what's really going on here. All right. Right, and we've already discussed this as an example. This is another example. Right. So, and understand the difference between managed information systems um, and we'll see later in the semester what a market research system is. But so it's the system itself that provides this. Now, if you go back 100 years ago, these are probably pieces of paper that people wrote things down, and then of course they were computers, and they were put into what's referred to as silos. Right. Again, these are terms that are used in military and also in farming. But if you imagine a long structure where nobody can see in and nobody can see out, right? There were silos of information. The problem is maybe it would help if the sales department knew what was in inventory on the operation side, but they were in a silo, they were in a silo. Well, now systems are talking to one another. So that if I go into Duane Reade and I buy a smart water, and I pick up a smart water and I go to the point of sale terminal and I go, bing, that point of sale terminal not only updates the accounting forms, but it also triggers in the system that has inventory. We're down one more. And if it suddenly was going very fast, they would say it's going fast. There's probably a run on the waters or something's wrong with the system. In either case, we're going to be out of these smart waters by tomorrow, XYZ time. Or it's this time of the year, it's hot out, when the temperature goes up, more of these products sell pretty quickly. And when they sell more pretty quickly, we run out. And what a store hates is being in a stock out condition or they've overstocked. They bought all the wrong things and nobody's buying it, or suddenly people want it and we don't have it on the shelves and they're going to go to another store and buy it and we lost all those sales. So these systems then trigger what used to be general manager at the end of the day, have the salespeople run around. What do we need? Let's place the order. We'll call it in or fax it in. And then the distributor, usually a company like Cisco, SYSCO, will send it, and maybe a week or two later it shows up. Now what happens is the system then tells the inventory system on the other side, we're going to be out by tomorrow, the day after, which tells the system at the other end to basically, as long as it's not above a certain number, hit the purchase order for $10,000 in product and have it shipped. And now all of a sudden the smart water shows up in 3 or 4 days. And the system tells the general manager in 3 or 4 days, or whichever particular day it is, there's going to be a truck parked out in front of the store. And that person is going to say, okay, we're going to have an extra 2 people come into the shift that morning to help unload the truck and then and then put it in the stock. And now they have systems that were created in the Bay Area where they have a robot that runs up and down the aisle and it literally looks at pricing and where there's gaps in product, for instance, theft, and then it triggers that someone needs to do something about it. So essentially, what people did, the computer systems are able to do more quickly, and it's because the systems can talk to one another. So the sales end that was in a silo is now talking to the inventory side on the other side, and they're able to do it within microseconds. And then the product is on the floor, and the company is more efficient, more productive, sells more product, make more profit, and everybody's happy. Customers get what they want. Investors see their stock price go up, and there you go, right? And the guy who makes sure the technology is there is the information technology officer, right? And this is what I was describing, right? Marketing is bonus and sales is bonus and creating new valued products and selling more, and operations is bonused on reducing costs. And so they are diametrically opposed. In business, we call it an agency problem. What marketing wants is going to hurt operations because they're going to have to open up a new line of business, a new line of production, which is going to not reduce their costs, but increase their costs. And if operations doesn't do it, then marketing can't create a new product and sales can't sell the new product, right? Because operations didn't do it. So this is where the company has to work together. And this is where operations has to trust what marketing is doing is going to work. And marketing has to trust that operations is going to build a product that they need, right? And that's part of the reason why technology is helping, right? Same thing with finance. You know, do we have the budget? Can we actually do this? Or do we have to wait till finance has time to meet with us? Do we have the people? We want to open up let's say that you are a company that sells rum in the Dominican Republic, and you now think that you're ready to break into the U.S. market, um, and you want to bring some people over who understand the business. Well, it would help if they're bilingual. It would help if they not only understand the marketing and sales skills, it would help if they understand the US market. Well, the people who know all of this is HR. And where are these people? And are they trained? Are they prepared? Right? Marketing doesn't know it. Operations could care less. And finance has nothing to do with what are the skills, experiences, and education of our staff. That's their job, right? But it would help if marketing is saying, well, if we open up this new branch of business, say in Miami, right? Do we have the people to be able to do it? And if by looking in the system they can see it, boom, there you have it. And then of course the executives want to be able to see it. Like they're the ones that make the decision to go into the new market. So right. This is kind of what I was describing before when I said how many students are female and from a diverse background 10 years ago than the following year, the following year, the following year. So as I'm trying to make a decision as an executive and I want to make future decisions, or a company wants to say, yeah, we'll give you a grant for money for more systems or classes or whatever, how do I figure out the future possibility, right? I need to know what the present situation is, the past performance is, and then, well, depending on the situation, as I mentioned earlier, every business is different. Schools are different than companies that make cars and banks and sports teams and stuff like that. So it depends on what we're talking about. But I still need to be able to evaluate what are the probability of doing something at a low risk in the future. I've got to look at today and I've got to look at yesterday, meaning last year, 10 years ago, et cetera. And I have to look at these different areas of the business to make those decisions. And make sure that the system that supports the information is large enough to be able to handle all this information. And that's beyond what I'm going to ask of you in the class. So that's more about technology. And where do I get my data? Now, this is important. And this is going to show up on the accounting side. If I'm running a business, where do I get my information to make those decisions? Well, if it's a store, I can just look at the sales receipts. I can look at the movement of inventory. I can look at how much space I have, how much beer did I sell in a bedroom community of Queens, in the middle of football season on Saturdays and Sundays, right? Because there's college football and there's professional NFL football. It tends to be high, as opposed to how much suntan lotion did I sell between, say, June and the end of August, in some of these same stores, right? So I can look at sales receipts, I can look at inventory levels and how they moved. I can also look at external sources of data. So, for instance, I can look at general information about how much of a particular product, whether it's beer or the suntan lotion, was being sold. How much was sold in the industry? So if I'm Dwayne Reed, what about CVS? What about Rite Aid? What about Walgreens? And what about places that sell it that are just for, like, liquor stores for beer? And what about just for places that sell sporting wear that supports summer activity? So I can look external data. Of course, I have to pay for it. Some of it you can find for free. Like if you open up a business, the government does census all the time. They're doing one right now, and they gather data that includes, like if you want to open a restaurant in Brooklyn or Queens or in the city, most of these stores are exactly the same size. They generally have an understanding of what it costs in terms of rent, labor, and how much money you make. Like on average, retail in New York City they make about 2.5 million a year if they're successful. Now there's some that are more successful, like West Elm will make 17 million. But if I'm a mom and pop shop that makes it, you can figure out, here's the store, here's what it costs to rent the store, to utilities, insurance, etc., depending on if I'm selling clothes or selling food. And here's how much money my competitors typically make. Now, if I go into business and I'm making less, I'm doing something wrong. I'm either spending too much on marketing, or maybe my costs are too high. I'm not managing it well. My prices are too low. It could be a number of things, but I can get that external information, paid information and free information. And normally, because everyone has to finance, they have to find the money for it. Banks provide a lot of this information, and they're happy to do it because they want you to be successful. And if you're doing it on your own, you can go into a small business administration office, and because you and I pay for SBA, and SBA is around because the United States started it with small business, and so they always want to support small business. And we learned in the first chapter that between 70 and 80% of GDP of the United States is produced by small business, although it's the reverse, 70 to 80% of the money that's created. In other words, if 70 to 80% of the businesses are small business and the rest are big business, it's the big business that produce 70 to 80% of the revenue. But what that says is that you've got a lot of people who want to run their own small business. And so therefore the US government says we have to support that. Not only for that, but big businesses usually come out of small business. You know, Apple started by Steve Jobs and Steve Wozniak in Steve Jobs' garage, right? They were a small business that became a multinational, massive business. Hewlett Packard, same thing, started in a barn, right? So they also realized that the future of the United States depends on small business. Well, that means that you can go into Baruch College, Pace University, or Columbia. Those are the three in the city that have SBA offices, and for free, walk in there and say, I'd like to meet with somebody because I'm interested in starting a business. Now, there are two parts that after you meet the first time, you have to pay, like legal, and I forget the other one. But everything else is free because you and I pay for it through our tax dollars. And part of what they can do is help you get access to information. It talks to this external data, the sources that are free. They can say, we can help you get data that says things like, I want to open a shop, I want to open it in Park Slope, I want to open it in Long Island City, I want to open it in Spanish Harlem. How much does it typically cost in this? Like, I want to do a pet store, or I want to do a restaurant, or I want to do a grocery store, whatever. They can get that information, and how much on average do they typically make? At least that gives you an idea of what you're working with. Like, how much money do I need to have to get into the business? How much do I need to make this business be successful for a year? And how much should I be making? And when I go over it, I know that I'm doing better than average, right? And you can see where this data becomes information very quickly because you're trying to solve a problem, right? And you can see, as we mentioned earlier, there's customer data, suppliers, bankers, trade and public business publications can help you figure out what businesses are good, who's doing well in it, etc. There's conferences you can go to. Like, I think the Javits Center's always got something, but I think the toys people are over there. So if not as a consumer, but as a customer, in other words, if you're selling toys, or you make toys, or you have a store that sells toys, let's say to children or to teenagers or whatever, that's going on in the Javits Center right now. So you have to be in that business to be able to get in there. Unlike computer service and government sources, there now you can do it the same way. You can get access to government information online. And then firms that specialize in gathering data, you have research firms. Gartner is in Stamford, Connecticut. Nielsen, people are usually familiar because they do things with television. You know, so there's agencies that you can work for, and all they do is gather data. For those, you have to pay for it, though. And you notice the cautions that can be very expensive. So, and this is what I meant by these can be very specific. So how do you collect data? First of all, you have to be able to collect it, and we're going to see in accounting that that's part of the 6-step process. So you have to collect the data. It could be surveys, it could be like online, it could be government, you could pay for it. It could be internal data, but it has to be collected. Then it's stored. Like now, there were a time when people would put things into file cabinets. Well, you got to get away from that, because you're going to lose, because all your competitors are going to be creating databases and storing it in the computers. And are you storing it in one system or in a system where others can actually get access to it? Let's say you decide, I don't want to be an accountant. I want to work in biotechnology. I want to work in one of the large clinical labs. Well, the biggest one is in Japan. The second largest is Quest Diagnostics, which is over in New Jersey in Teterboro. It's the second largest clinical lab in the world. And then, of course, we have the CDC in Atlanta, the Center for Disease Control. So when COVID pandemic broke out, the government immediately went to CDC and went to Quest to say, do we have an outbreak? You know, if there's a flu virus, you know, et cetera, et cetera. All of these things they manage. So if you're pregnant, the blood test is probably going to at some point be picked up by Quest, these little vans with the green symbol on the side. They generally will pick it up, and the test will be run, and Quest will have access. The question, though, is where do you store the data? Now, there's some things that have to be stored on site, like hematology blood. They have to be done on site because they're perishable. You can't hold blood for a very long time. There's some you have to hold on site for legal reasons, like HIV data. There's some you hold for maybe 5 years, 7 years. HIV data, last time I looked, was over 50 years. So where do you store it? On site, cold storage, off site? Is there something like when they do police things? Woman gets raped and they have forensic data. How long do you hold it? Where do you hold it? Right? You can imagine that's really critical, because if it gets misplaced or it gets stolen or it's left out and it becomes useless information, etc., that's a big deal, right? And then the update. Now you may think, well, yeah, that makes sense. You sold some more, so you add more information. Not that simple. Do I add the pieces together? In other words, I made this much this month. I made 100,000 this month. I made 90,000 this month. So if I add them together, it's 190. That may not be the right way to do it, because maybe what you're saying is I sell suntan lotion June, July, and August. So I need to know those 3-month periods. So don't add June, July, August, September, October, November, December, because that data now is corrupted. I don't know how much of it I made because of the summer months, or if there was a lag because we had a warm September. I don't know, and so it may be I want to add it. It may be I need to create files of data by month. It may be that I need to append it. Then once I have it, I replace it with the next file. It all depends. It's all situational. You have to figure out what is the industry and business, and how does it help you? How does it solve the problem, right? So how I update the data is also important. And then the next one is process data into information, and we talked about that earlier. So it's like, how do I take this raw data and turn information? Well, I have to have a problem. So how does it solve my problem? And now it's like if you're into football, right now it's an up and down thing about the Jets because of Zach Wilson, I think his name is. Like,
Yeah, it's Zach Wilson.
is he doing well? Is he not? And people will say, and all sports will tell you, what's his is he throwing interceptions? What's his completion ratio? The ratio. Everything's a ratio. Yeah. And then what do they say? Well, let's compare it to Pat Mahomes, who quarterbacked yesterday. Let's compare it to another rookie who just broke in the league, right? It's exactly the same thing. Exactly the same thing. If you are going into a military engagement, how many soldiers and which devices do we need to go forward into that position, that forward position? If I'm entering a market with a new business, right? What is the chance that I'm going to bring a new type of like jeans? Like it blows my mind because I'm not what they used to call a clothes horse, but I can go to Levi's or Gap and buy a pair of jeans for $49 off season, and then I go to Skull and Bones and pay $300 or $400. So what is the chance that I can open up a new Skull and Bones in a new city that I think I'm going to do well in? I don't know, but there's the problem. I need the data to show whether or not I'm going to be successful. So I need to look at other businesses. So for instance, when the economy does poorly, here's a question. When the economy is not doing so well, like during the pandemic, are liquor sales higher or lower?
Higher all day.
And what about movies and social media games? When the economy is doing poor, are the sales of like movies, Netflix subscriptions, and social media games, when the economy is poor, higher or lower?
Higher.
Why?
Distraction.
Distraction. Right. People want to escape their reality. It's interesting because during the pandemic, the churches were closed, but all the bars stayed open, and the
Of
liquor
course.
stores stayed open, right? Because of course they generate tax revenue into the cities, right? But what I'm getting at is this isn't direct information. I can get direct information. I can literally go into a liquor store and say, how much money did you make during 2008, during the recession, or during the blackout? Or I can look at information in a grander way and then draw correlations. So when do people buy expensive jeans? The truth is, I don't know. But when do they buy it, and what are purchases like in urban areas, suburban areas, and rural areas? And that kind of information then helps to inform me whether I should open this business or not in this next city that I want to go into. Right. So it's not always just one-to-one or direct information. Sometimes it's a correlation of information.
Yeah, I find this interesting.
It is because, first of all, data doesn't lie. Sometimes you don't have enough data, and information doesn't lie. Sometimes you haven't asked the right question. And you know which business does really well in this? Management consulting. Because
Really?
the truth is, oftentimes it's not the answer, it's the question. Right? It's more important to ask the right question than to give me the right answer, because your right answer was good today, but it don't help me tomorrow. But if I have a process of asking questions, I'll always get the right answer or get close to the right answer. Tomorrow, the day after that, the year after that, 5 years after that. That's what management consulting does. I mean, in addition to the fact that they understand some particular areas better than others. Accenture is really good with systems that manage data. KPMG has a consulting arm, and they get most of their business through accounting because they work with a lot of businesses and they understand how industries shift and move. And so they ask questions, and they constantly are forecasting change as a result of that.
And there's money in it.
There's money. Well, yeah, I mean, all of these are for-profit business, and they're providing, remember, value, which means that there's some utility in that. And so therefore the value goes up when they keep adding more and more. Like now trust is a big issue. So I went to school with John Edelman, and Edelman, John's father founded Edelman PR, and they created something called the trust meter. And the trust meter talks about whether companies can be trusted or not. And as a result, will people buy their products or not? There's also another thing which you might find fascinating, where they have power indexes around the world, and they also have trust around the world for geopolitical reasons. And they look at, if I invest in this country, is there potential that the company's going to get overrun? What is their feelings about the U.S.? Is there corruption in those areas? So do I want to open a business there or not? All right,
yeah,
guys.
dude, that is cool.
And let me open up the pictures. Let's get the attendance in here. So if you guys can open up, so Christina, Christopher, Jaquan, Yami, Martin, Cami, Miracle, Ambra, there's Quinn, there's, I always mess up your name, Shinny. I said probably why you stick Rose in there too.
We're taking the attendance picture?
Yes, we are. And then Anthony and Brian and Matthew and Anita and Ryan and Harlan. I think I said everyone's name. So, oh, I didn't come up with something for today, but I think last time I had the light bulb. What am I gonna do? All right, give me a second. Let me find something to sponsor the classic today. Um, what do I have? What do I have? What do I have? Okay, how about yeah? See, this is gonna tell you a lot about me.
I got there.
Well,
The coffee?
no, if you live with somebody, you probably make your own salad. But when you're a bachelor and you're lazy as all giddy up, you probably go to the store and you buy a pre-mixed salad. So
That's
you see
good.
how this one thing can probably tell you a lot about me as a person.
Well,
Martin, what do you have? It looks like you have a, is that the ear thing? The earbuds? Cool. And Rose has water. And Christopher has, is that biscotti? Are those crackers? Marshmallows.
From
Man,
Briscoff.
what is it? Oh,
yeah,
Bisco.
they're
What are those,
Biscoff.
Briscoff.
what are those crackers?
They're like for coffee.
Is he?
Oh, okay.
Yeah.
And Quinn, I'm jealous. Quinn has, those are some fancy looking marshmallow bag there you got there. And Nicole has a nice shower curtain. And Yami has a poodle. Somebody's trying to score big points. And Matthew has, I don't know what that is. Is that a, I don't know. Oh, it's a crayon. It's the top of
Yeah,
a
it's like a
crayon.
crayon bank kind of.
Oh, okay.
Ah,
There's something in it. And Cammy has something, but it's so dark I can't tell. What do you
Yeah, I
got?
don't know why my room is so, it looks so dark, but it's
I don't
fascinating.
know. And Miracle has the ceiling. I don't know what Miracle has. And Ashley
I have
has,
water.
you have water. And Ashley
Yeah.
has headphones, I think. Oh, and now I see it. Now I see it, Cammy. And Harlan, Ryan, Ambra, Anita, Jaquan, Ryan. All right, let me frame the picture and then I'll put it back up. Let's see. Let me frame the shot. Oh, I'm sorry. John has Celsius. Actually, did you get that on the plane? The first time I ever got that. I got that on the plane.
the Celsius? No, I get it here.
Oh, okay.
It's
I actually
this
haven't
one
been-
tastes like crap though. Don't
It
drink
tastes
it.
like crap.
Yeah.
All right, on three, get ready. One. Oh, and Giselle, sorry, you have Gatorade. And actually I get the same vitamins, Anthony. So on three, 1, 2, 3. Wait a minute, it didn't click. Oh, that was weird. That was a delayed click. Now I'm gonna look like a moron. Let's see how it came out. Hold on, let me make sure I did get it because it was like a delayed click. Let me hurry up and do this, and then
He's so slow, bro.
I think the problem is that with the when the cyber attack, I had to record my class for Friday because I couldn't go in, and so
Uh-huh.
I wound up, yeah, I was up late because,
What's the story with that? Have they
well,
they
I don't know
recovered?
yet because I was told I got an email yesterday from the chairman of the department over at Baruch, and they said, and I think I don't know if I got the provost, but you know when they use language like, we believe that things are better now.
Are they?
I don't know. I don't know. I mean, I haven't been in the building yet, so
I guarantee you it's something very simple.
no, it's a
and-
ransomware.
It was ransom?
Yeah, ransomware. So I don't know if it's from Russia or China or I don't know where it came from, but the school got attacked. You couldn't even get in the building because the doors were controlled by it. So
Yeah, it's, you know, probably a similar attack to MGM.
the studios.
Yeah, MGM got a cyber attack not too long ago. And
Well,
it shut down the
Yeah, like
entire
a month
casino.
ago, right?
Well,
MGM
10
Yeah.
years
was
ago,
attacked.
City College got attacked because they were still using social security numbers as students' ID numbers, and they got
Oh,
in.
dude.
Yeah, and the weird thing is, they specifically attacked the engineering school, the one school that should be pretty good about
Yeah.
protecting itself. So, all right. So I know the time is run out, and I know that a couple of you usually jump from this class to another. So let me just remind you that, let me close this down. Let me just remind you that, sorry, I'm just looking for the share button. All right, so to remind you that, remember, in the next 2 weeks, we're doing accounting. We're going to finish information. We're going to jump right into the balance sheet and the accounting part, which covers the major parts are balance sheet, income statement, cash flow statement, and the ratios. And then we're going to do the finance part, which is more like, how does it work and where do you go for this, that, and there. We're going to talk about things. We're going to talk about things like stocks and bonds and how the federal government works as far as financing and how business work with financing. Again, at the end of the day, it's about risk and how do you pay for things. And then from Blackboard, remember, so on discussion board, remember,
Apple.
yeah, Apple. And I noticed a lot of you hadn't done it, but you should have done the part on chat from back in chapter 2. I noticed only 5 people did this. You should have done this because we talked about things like utilitarianism, and that's today you see it's coming up because I'm talking about how utilitarianism is connected to satisfaction, and that's connected to value, and value is connected to price.
So we could do the Apple one now?
Yeah.
Your discussion board, because you told me to wait.
Yeah, so let me finish what I'm saying, and then I'm going to go through each one of these. So you can see where this is connected to today's chapter, because you can see where utilitarian is connected to value, and value is connected to price, and price is connected to profit, right? And we're talking about accounting, and eventually we're going to look at things like net income, which gross income, operating income, and net income, and these are all profit. And then you should have done this also, where only 3 people did it, because this has a lot to do with accounting, because Enron and Arthur Andersen, Enron was one of the largest companies in the world that bankrupt in a month, but Arthur Andersen was the oldest accounting firm in the United States history, and they got in trouble for some of the things they were doing. And you learn from mistakes, and that's the mistake they made. And so therefore, if you had done this, part of your understanding of accounting would actually play into this. So you should still do these. Now, the next one is, I think it was Christina was mentioning, is that YAPL. And so at the beginning of the class, I did put the chapter numbers in here, but now you get to do this because this will give you an idea about accounting. And so as we get into it, in addition to obviously read the chapter and go over the slides, you can see where, like, what is Apple's stock price and all these kind of things. And I want you to do this. I want you to struggle through it because I want you to figure out how to do it. And as we go through it, it'll be more meaningful. So the way it works, actually, you know what? When I set the class up, I did open up this here. I was going to
just go to Yahoo Finance and
yeah. So if you go to yahoo.com, actually the way you type it out is you type out yahoo.com/finance, right? And it then turns into finance.yahoo. But anyway, this is where you can look up, and you're going to use this for your project. So it's important that you start getting used to this. And of course, it gives you information about what's going on during the day. Actually, I think Kellogg's is selling part of their company. I don't remember who, but when that happens,
Kellogg's, like the cereal.
yeah, I can't remember which part, but they're selling part of the company. I think about it because I went to the Kellogg Graduate School of Management at Northwestern. They gave $30 million to
That's a good school, man.
It is a good school. I had a great time there.
Yeah.
So anyway, you can see it's talking about apparently the Powerball is up to $1.04 billion. But anyway, you can go in here.
I hit that. I'm sorry. I'm not coming back to class.
Yeah, I probably won't see anybody in the class. I just hope you guys remember me. But if
Yeah,
I
I'll give you a Christmas gift.
that's really kind of you. words couldn't possibly express my gratitude. So anyway, you see when you type in Apple, the symbol AAPL pops up. You can also Google search some of these symbols, and then when you click on it, if the computer was going a little faster, and if you look at this, here's the current, this is the stock price right now, $173.53. And if we stay on here long enough, this is probably going to change because this is a live trading feed. See, it's moving. So people are buying and selling stock at this exact moment.
Right.
See it bouncing around, right? And so that, and then when you go into here, you click on financials, and when you click on financials, you will get to where it says income, balance, and cash flow statement. So there's the income statement, there's the balance, and there's the cash flow, and there are the numbers. And always remember that when you look at these statements, all numbers in thousands. So for instance, when you look at total revenue from 2020, because you always want at least 3 data points on a graph, you have to add 3 more zeros onto here. So this is 274 million.
That's billion, yeah.
Exactly. Right.
So, are we gonna get into the weeds about what all this stuff means?
Yes, that's one after I finish information, that's what I'm saying. I'm going to get into income statement. I mean, how you actually set them up.
Yeah, okay.
What is an income statement? What is a balance sheet? Break down what these parts, use a simple version, and then get into a corporate version. So,
Okay.
Yeah,
because I always found this interesting. I just had no idea like where to even start.
right. So we're going to get into that. If you notice, it's actually at one point it was the most valuable company in the world. In other words, if I take, it's $2.7 trillion is the value of the company.
That's
So
the market cap.
if I take this number and multiply this number by the number of outstanding shares, that number comes out to 2.711 trillion. So if I divided 2.711 trillion by $173 and whatever this stops, it will come out with the number of shares that are outstanding. Right. So, and we'll get more into that. And I just want you guys to kind of muscle through this and get an understanding. And then when we get into it, you'll have context for it. And if you notice, this is today. So the market's open at 9 and it's close to noon. And then the market's closed at 4 p.m., at least in the US. And then, of course, Asia opens up, and then Europe opens up, and then America, and it goes around and around and around and around, right? And I can certainly do a 5-year view like this, and you can see how the stock's performing in 5 years. And
That's interesting.
And then what's interesting is if you look at this, look at the volatility of trades, and notice it jumped over here. Notice the date. It's probably
March 1st, 2020.
It's probably March 16th, and that was the day that the U.S. closed. So most companies, you see this artificial dip, and because people emotionally trade, and so like, oh my God, the world's ending, sell.
People made a ton of money that day.
And that's when you buy. That's when Warren Buffett says when the markets drop, he dives in. I mean, he doesn't dive into everything. He picks something that he knows something about, but that's a good time to buy. But if you had bought stock on March 16th, you would have paid $63.57, right? The number, if you look over to the right.
Wow.
Right? And today that stock's $110 more. So you can easily do the math if you look at it as a fraction or ratio. What is 63 to 173? And what if you had invested 10,000? You can figure out what the 173 would be today, right?
Yeah, you made probably about 30 grand.
So you can easily see, and like I wish there was one that was like perfectly half of 173, which is what's 80, 86, 85 and 85 is 170, so maybe around $86. So if I could figure out where 86 is,
10,000,
right around in there, so somewhere in there. But anyway, so around June, the end of May, beginning of June, you would have doubled your money. So if you had dropped 10 grand in the market that day, it would be worth 20 grand today. And if you think about it, real estate increases 3% a year. So 3 years is 10%. This is 100%.
Yeah.
Now, all stocks don't
move as high and as fast, but it gives you some indication, right? So we'll get into stuff like that. And, you know, the company I actually had set up to talk about was Kroger, which is, believe it or not, most people think it's Walmart or something like that, or Safeway. Kroger is the largest grocery store chain in the United States. And they actually recently sold off some of their stores too. More and more people are going, actually, why do you think companies are selling, why is Kroger selling some of its stores? Obviously low performing, but why? Because people still need food.
Right. Like what's the location? Do you have any idea?
I mean, it could be location too, but generally, if you could just take an educated guess, why do you think they're selling some?
The cost is too much. You know, on certain products, you don't think?
Maybe in people, you know, if they want to starve to death and die in the street, but they still need to eat food. They're still getting food.
Hmm. I mean, there's got to be a reason.
They're going somewhere else. More and more people are either going to different places or ordering online and having them direct.
That's what I was
That's
about to
true.
say online.
Right.
Online
they're buying- Say it, Tristina. You're right. Say it.
Yeah, what I was gonna say was online purchases, because everybody's going online. Nobody wants to leave their house now. Everything is buying online, having it delivered, things like that.
Or even if they want to go, leave the house, they think, well, remember we talked about utility value? They're like, well, I value my time going outside the house, maybe to go to the park, or you know, you take your family out, or you go to the movies, or you go
Exactly.
whatever. But you're like, I don't see the value of walking into a store to buy food when they can just bring it to my door, right? And
Yeah,
so,
I don't remember when the last time I even went to the grocery store. I'm not even gonna lie.
well, our value systems have changed. The pandemic forced people to realize, oh, I can order online and the food shows up. That's kind of convenient. So you know what? I'm not going to the store anymore. I still want to buy the food, but I don't need to go in. So if you don't go in, you don't need the building. And if you don't need the building, you can get rid of it. So as a society, just in the past 3 years, within the U.S., our value system changed. And remember, companies are trying to figure out what do consumers value and then price accordingly, and also do business accordingly. And then generationally, the younger generation are like, I want healthier food options. And so if I'm a business that sells food, if I can do it in a big numbers, economy of scale will drive costs down, and so I can sell more healthy food. Now I can go into what they call brown deserts, like in the Bronx, and deliver healthy food right to the door. As long as I can deliver a lot of it, then I can justify the expense of doing it. And then it will, unfortunately, it's going to kill the mom and pop businesses up there.
Well,
But
yeah.
people who live there are going to eat better, and they're going to have healthier, better lives.
Yeah.
Right.
Well, aren't they closing a bunch of stores in Chicago because of like theft and stuff like that?
Well, that's another thing that, you know, in
Yeah.
California and New York
New York too.
and Spanish Harlem, they closed Target. So
Yeah.
right, there's an issue there where, because at the end of the day, the investors are like, look, we're not making profits, so
We're not making money, so deuces. Yeah.
you gotta do something right. Exactly. So, but there will be, it's kind of like water. If you put a block and water goes around, there will be another way to actually address that. Maybe they have pop-up businesses that show up in a van. Maybe people deliver and they buy online. Maybe the ferry
Yeah.
stops and they bring them over someplace else. Whatever the case is, there's so many other ways. And this is, for me personally, I find it exciting. I love when
It's interesting,
problems
yeah.
pop up, because then I get to be a problem solver, and you know, either an entrepreneur or a consultant or both, and then you solve the problem and you create opportunity in business. So
I
Yeah.
would think that online would bring you a lot more money. I don't know why stores just don't go online, because they could charge delivery fee, a convenience fee. They could just make up a bunch of fees.
or not charge the fees and sell more of it.
And sell more of it. Yeah.
Exactly.
That's how you get them.
I mean,
Yeah, I mean, if you sell more of it, then you don't have to charge all those fees. That's what Amazon Prime is all about.
Yeah. You
Right?
create
The
a
problem
monthly
now is that
membership.
so many
And
people return so much, and they're like, look, we're not going to take all these returns anymore. But if you sell more and more, your point is a good one, because think about it this way. How much does it cost to rent a building the size of Target in Spanish Harlem, and then staff all those employees and provide utility like the air conditioning, the lights, and all this stuff, and hold all that inventory, as opposed to you go find some spot deep out in New Jersey where nobody wants to be anywhere, and that's what Amazon's doing, and then have it, you order it online and it just shows up.
And it'll be there at the end of the day.
And by the way, Amazon bought Whole Food,
Yeah,
and Amazon's already in the delivery business.
yep,
And
they're
so
in.
they looked at the numbers in correlation and realized
It's expensive
everything,
though.
and then the pandemic just basically put it on steroids and said, we're ahead of the game. Let's,
It's a
People
$10
forget-
delivery fee.
in 2000.
Amazon,
Say it again?
Amazon is releasing like this thing I think is in 2024 or 2025 where they're going to do same day delivery with the drones.
Well,
They
I don't know
already
if
got
they can do that.
they already got approved by New York State. They were waiting for the approval. They just recently got approved like a couple weeks ago.
So, okay, so just to put it in context, they do have some same day deliveries, right? And that's because they have arrangement with different kind of business partners, etc. And they do have drone deliveries in other cities and states. And the problem in New York, it's not so much upstate, right? The rural areas is a little less problematic. And I don't know if you notice at night, like I take the ferry, and so the easiest place to fly those drones is over the river, because if they crash into the East River, the Hudson River, and nobody cares.
Wow.
And so I suspect that they've been testing these drones up and down the East River, and because look, except for the Bronx, New York City is all islands. Brooklyn and Queens is connected to Long Island. Manhattan is an island. Staten Island is an island. Bronx is the only part that's connected to the mainland U.S. We're surrounded by water. And if you fly these drones around the waterways and then cut in and drop off, where there was a big problem was in Manhattan. How do you get these?
I mean, they already approved.
Hold on. Miracle, I understand. And that's why I was saying I know that some of you have to go. So I totally get it. Thank you so much. Take care, Miracle. Yeah. All right. Go ahead, Christina.
What I was saying was that the courts had already approved for them to do it in New York State. Like they just approved it. I didn't think they were, but they did approve it.
In the state. Remember,
Yeah,
New
it's
York
different.
State
It's
is
wide open.
huge. Yeah. Flying over Syracuse and places like that is no big deal. It's the city.
Yeah, it's gonna be an issue.
Part of the state. It doesn't matter the city. Because
No,
it said New York City as well. That's what I'm saying. Read the article. They approved it for the entire state, including New York City.
As long as it says including New York City, because regulations in the city are different than the rest of the state. For instance, you can carry a gun on your person in upstate New York. You cannot carry a gun on your person in New York City, right? So if it says the city, then that's fine, because there's several issues with the city. That one of the big issues they had was trying to fly these things around these large buildings, because the signals become suspect and there's a better chance for them to fall out of the air. Another thing is you can't fly these things over the United Nations, because what people don't realize is the United Nations is not in New York. That's considered international.
It's international water, pretty much.
It's completely international. And so I live across the river. When I first moved here, like we just completed the opening of the general session of the UN. Ahmadinejad was still in power coming in, and they had military boats in the water, and they were telling us not to loiter in front of the building or on top of the building because we faced the UN, because we could have easily. Okay, Anthony, take care. Thank you so much. We could have easily shot, something into the UN and killed majority of the free world, the leaders from the majority of the free world. So there's different kind of issues.
Yeah, the FAA is making a big deal about it
in the FAA, because you've got 3 major airports and then 3 minor airports. So you can't fly into air traffic space. So if you're saying that they included the cities, so that's great. I just want to make sure that we're careful that we're not just making general statements, because the state of New York and the city of New York, although they're the cities within the state, they're not the same geopolitically, and in terms of regulation. So we just have to be careful when we just make a blanket statement. But if it does include the city, that's great, because I've noticed that I've seen more and more, like when I take the ferry down to Lower Manhattan and come back up, and especially at night, and I look up, and I know those aren't helicopters and planes. They're too small. They're not making a lot of noise. They're not moving as fast. And if I pay careful attention to it and I wait for light to pass by, I can see the four prongs hanging out. So I know more and more are actually showing up over the river. The other thing that Amazon does is, depending on where you live, they have these things called lockers. And so some of the buildings, they pay, I guess, a certain amount of rent. But let's say you live in a 10 square block area and you've got a building that's several stories high, like they have an Avalon building near me. They put these lockers out. And so you go up to the locker and you have a code. So you have something delivered, but you live in maybe a walk-up building like a brownstone. So you don't have a doorman or anything like that, but you want your XYZ product delivered to you. Well, the Avalon building, which is around the corner or so, has these Amazon lockers. So you just walk over to the Amazon locker and you click, and then boom, it comes out. Another business that realizes, and I find it ironic and funny, is the U.S. postal system is constantly threatening to go bankrupt. It used to be in the 70s, the postal system was broken up by state, and then in the 70s it became a federal agency. The joke is always that if we were to go to war on U.S. land, that the president has control of the 5 branches of the military and the post office. You can literally send the postal carriers out there to start beating people up with postal bags or something because it's part of the federal government. And then when they made the rule that they said, no, we keep the letters, but we'll allow the packages, which was a really stupid move because UPS, DHL, and Federal Express took the packages, and then nobody realized it because the federal government doesn't really look to the future that well, that nobody sends letters anymore. I mean, they were surviving on junk mail, and then when Netflix was sending CDs in the mail, but now it's all streamed, so they're running out of money constantly. Well, I lived in Park Slope before I moved to LIC, and I used to go to the corner to get my stamps. And it wasn't like you legally weren't supposed to do it, but you're not going to go all the way to the post office when you just walked into the block and say, hey, look, I'll pay you a couple extra pennies for some stamps. Well, guess what they decided? It's a good idea for the local businesses to carry stamps. Like,
Yeah.
whoa, there's a clever idea. How about like a vending machine with stamps? And then, and now if you go into the drugstores, you can actually ship product from the drugstore. So instead of me finding wherever UPS happens to be, I can literally go over to the drugstore. And now, of course, those businesses realize it. So it's like, no, we'll come to the building and pick it up. Everybody's trying to replace everybody else. Well, Amazon bought Whole Foods, and they're already in the delivery business. And to your point, Christina, they're delivering it not just in trucks and this, that, and the other, but by drones. I'm sure they're not going to deliver eggs by drones, but they're going to deliver certain things. They're basically competing with the post office, and they're taking over the last mile, which is what they wanted. And they could do it more efficiently, right? And so so if Target doesn't figure out how to deliver things more efficiently or work with partners, which is another way. I mean, JCPenney is begging for business. Macy's is begging for business. So if they could somehow, some other companies say, okay, we're going to put our business within your store, right? All right, Yami, take care. Thank you so much. So this is, see, if you're into marketing and if you're into consulting, this kind of stuff is fascinating because you're being paid to look into the future to figure out how the trends and the direction business is going. And then if you work for a company or a consulting agency or something like that, or even in finance, because all the great information is in the banking side, because everybody has to go there to get money. And in order to get it, they say, here's my business plan. So you're constantly being given information about new exciting ideas and new businesses that are being financed to move forward with. And consulting, the same thing, venture capital firms. So if you're interested and fascinated by the future, by new ideas, marketing, consulting, finance, venture capital, investing, things like that, there you go. Absolutely, Amber. Thank you so much. Class is
So
over.
for management consultant, I need a business degree, huh?
Okay, so how do I answer this? Depends.
Okay.
Should you get a business degree? Especially if you want to work in one of the elite business management consulting companies? Yes, I would say that it's not a de facto, but to meet the
It looks good.
cut, you have to do it.
Yeah.
Can you work in management consulting without a business degree? Absolutely. There are people who have accounting degrees that work in accounting. The four big major accounting firms, as well as Accenture, do consulting.
Hmm.
You could work in, like, you've got a government background, you could work for a government contractor and
Yeah.
work in the consulting side of the contractor business to look at where business can go. So, for instance, if I'm a small government aggregator and I work with one out of Chantilly, Virginia, and out of I was based in Hawaii, they were trying to figure out how to grow their business. I put on my consulting hat and said, if you go after some of the large contractors, Boeing, McDonnell Douglas,
Mhm.
Raytheon, all these, they're looking at business where the loaded cost is close to $200 per person per hour every day of the week. They can't go into an opportunity, say, in the $5 to $10 million range, because they then have to lower their cost maybe by half. Well, they can't do
Right.
that because they can't cover their fixed costs. But a small aggregator, a small consulting firm can.
Slide right in.
So they're lower. So
Yeah.
in a way, you create a barrier to entry if you go after small business opportunity. Now, if the business that you're taking care of begins to grow, the big company may decide to partner with you and eventually take over you, or just push you aside and grow that business so that it can scale, so they can justify the $200 per hour per person, whatever.
Yeah.
The reality is, whatever you're consulting in is going to change anyway. And so you're going to move into another aspect of the business and another aspect, or shift into another industry.
Yeah.
If you
Interesting,
work
man.
for Gartner up in Stamford, Connecticut, that gathers all this data and information, eventually they created an arm that says we can consult. In other words, here's all the data, here's all the information. People buy it, and we make a boatload of money on it. We also have ideas about how business can actually change what they're doing. So people who went into, like, maybe they're statisticians and math experts, and maybe
Mhm.
some of them are management or business people, they
Yeah.
essentially evolve into that role too. So when I say it's not de facto, there's no, like, you can't be a medical doctor without a licensed medical
Right. Yeah.
degree. That's it's the one funny thing about it. If you want to be a doctor, you have to be licensed. If you want to be um, uh, uh,
Like a
a
trader
number,
or something.
but you don't have to be licensed to run a company into the ground.
Right.
You don't have to be licensed to be a consultant.
Ah.
It's always kind of funny because we are in a country that, rises and falls on capitalism and business,
Right.
and a lot of it is, the benefit, our standards of living and our quality of life, in a large part, are the result of that type of economy. So whether
Yeah.
you like it or you don't like it, your ability to walk down the street and grab a quick Starbucks, that's a capitalist idea.
Right. Yeah. I'm sure you
Okay,
just got to be pretty good
thank
with
you,
people. Yeah.
Matthew. Good day. Take care, Matthew. Okay, no problem. Go ahead. What were you gonna say?
I'm just saying, like, in like the consulting space, I'm sure you just have to be, personable, really good with people, and knowledgeable. But
You
probably
have to be trustworthy.
trustworthy. Yeah.
You should be good with numbers. You should be able to work with a spreadsheet fairly easily.
Mhm.
You have to be able to do research, and sometimes research can mean that you have to understand the different. Um, um, there's certain technology you use to do research, like using SAS, understanding
Yeah. Yeah.
things like that. But the top management consulting company, at least in the U.S., is McKinsey Consulting,
Okay.
and they first go to places like Harvard and
Yeah.
the, the companies you typically think of that are elite and high end in the 4-year colleges for management consulting. But
Mhm.
then Accenture, you can work in Accenture, and after 2 years, the same thing with KPMG, you see your first big bump in salary, like 50%, your salary jumps up. And then and depending on how well you did in the company, or
Mhm.
Deloitte, or KPMG, or Price Waterhouse Cooper, Ernst Young, and you say, I want to go work in Paris, and
Yeah.
you've proven yourself, you're a valuable asset, and they say, okay, and then they send you over.
Wow.
So, and they say, well, I have a government background, I understand this, that, and the other, and this firm actually works in this space where they do consulting, and as a result of the consulting, then they come in and they implement systems and solutions to the company, and they say, we're interested in you.
Yeah.
Well, when I worked at GTSI out of Chantilly, based out of Hawaii, they were in 96 countries.
Yeah. It's a
So,
big company.
well, the U.S. federal government's Department of Defense is a big company.
Yeah, that's what I mean.
Right. You can work in Australia. You can work in England. You can. I mean, if you-
Anywhere where our hand is. Yeah.
exactly, and because how they implement solutions, you can work in the State Department, because
I don't like those guys.
there's communications, there's the policies from a political standpoint, there's
Right.
management, and there's economic. And the economic side is the one. Management and economics are the areas where they have the most difficulty. They can find tons of people to work in communications and tons of people to work in the political and the policy side.
Right.
But to manage you go in some of these embassies, and there may be hundreds, even 1,000 people in there, and
Mhm.
how do you manage the whole thing? And then from an economic standpoint, Israeli women get gas to cook food from Afghanistan, but legally you cannot transact currency between the two. But the business people
Right.
side want to do it. Well, how do you do it? Well, the U.S. Embassy has to go in and set up trade zones, and so they create one in Israel, they create one in Afghanistan, and then they make the sale from the Afghani currency into U.S. dollar, and then from U.S. dollar back into the Israeli currency. And then the boat crosses the Gulf and they transfer the gas so that the women can cook their food because they prefer to cook with gas. Or
Right.
you go in and set up a trilateral agreement with either Egypt or Turkey, and they do it from Afghanistan to either Egypt or Turkey, and then either Egypt or Turkey to Israel. And so, assuming you can get clearance, you can even go into areas where people like you and like lay people can't get into, who don't have clearance.
Mhm.
And so there's that side of it too, is my point.
Yeah.
So
Pretty cool.
yeah,
Sounds interesting.
it's very interesting. It's very interesting. So
All right. I'm gonna
All
get
right.
out of here, Professor. I'll see you Wednesday.
okay, work on the Apple, you guys. If you
Yep.
haven't done it, you should do that Harvard one. You should do the Enron
Yeah,
one.
I'll do the Apple one tonight. I did the other one.
Yeah, and then make sure you read the chapter and look at the slides, because we're going to get out of information and go straight into accounting. So
Sounds good.
all right.
All right, Professor.
All right, take care.
See you Wednesday.
All right, sounds good. Take care.
All right, bye.
All right, bye, Martin. And then Harlan, are you still there? Harlan, do you have a question? Okay, I'm assuming that you're not there, so I'm going to shut her down.